How's it going, everyone? So recently, actually yesterday, I was watching a video hosted by J and he had a guest on, Matthew Snider from Block 3 Strategy Group, and they do a show every Wednesday afternoon called This is Financial Advice. And it's pretty interesting, some of the things that they talk about, because Matthew is a financial advisor and he has quite a bit of knowledge for Web3 and crypto type stuff. So I like watching it because I like watching the information that people have, financial advisors and tax strategists, I guess, or tax attorneys in the crypto space, because there's not a whole lot that have this knowledge. So I was watching their video and it made me think of some of the questions that I've had. And I know that one of the questions that I've had, well, kind of a few different questions, go along with play to earn gaming. So recently, or last year and the year before, I had been playing a game called Step In, which is a move to earn game that will pay you for using the app while you're tracking your running with the GPS. And the app itself doesn't have any of my tax information on it. So that made me curious how all that stuff works, because in order to get into the game, you have to buy an NFT shoe. And then once you have that NFT shoe, then you can choose to upgrade it, buying different little things to upgrade it, or you can just cash out the money. Now, since the game itself doesn't have my tax information, then the IRS doesn't know how much I'm earning from the game. All they can see is if I take money out of my Coinbase account and send it to the Step In wallet, or when I take money from the Step In wallet and send it back to the Coinbase account. So they just see money coming in and out of my Coinbase account going into this wallet. And they don't know whether this wallet is my own or it belongs to somebody else. So most likely the IRS will just assume that all money that comes from that is income. So the hard thing about this is that the way things work with, say, for example, like a 1099 business. If you're doing DoorDash, then you're an independent contractor and you technically have a small business. Now, with play to earn gaming, I feel like it's very similar, because if you have to buy these shoes, like with Step In, for example, then that's technically a business expense, in my opinion, because you're buying something to help you earn money. So it's like going and buying a car for DoorDash. You know, you spent money on this and now it's a business expense. And all the money that you spend on those shoes to upgrade them are going to help you earn more money. So that's technically also a business expense. So the whole play to earn gaming it's still a little complicated, in my opinion, because of how all the taxes will work. And that might be something that could deter from people playing those games, is because they might get excited about playing the game and then realize they have to start paying attention or tracking their taxes. And then they don't want to do that. But it might be a way to kind of incentivize the way to play, is that, you know, if they're not tracking your tax information on the game, therefore if you don't withdraw any of the money that you're earning or anything like that, then you may not have to pay the taxes. But it sounds like I wouldn't be surprised if in the future they go back and start looking at all these different things and saying, okay, you earned money, so now you owe taxes on this stuff that you earned in the past. So it's a good idea to always keep track of what you have earned, just to be sure that you know what you need to pay if the taxes come due. And another thing that I was thinking of, let me take a look at my notes here, was with NFTs and airdrops. So airdrops are also considered income, and it's basically like a snapshot of when you receive it. So if you get paid or you get an airdrop, like for example, I had some XRP in my Uphold wallet, and because of that I received the Flare token and the Songbird token. So I only received a very small amount, so it's not really going to count to much. But if I had a lot more, then those airdrops would be counted as income, and I would have to pay taxes on that, which I'm still going to have to pay taxes anyways, but it's going to be a couple dollars, so it's not going to be really all that much, but I'm going to keep track of it anyways. But these are things that, since all this stuff is new in the crypto space, people aren't familiar with it and they don't know how any of this is working. Another thing that I had was I have the Pluto Alliance NFTs, and BitBoy Crypto was spreading out their YouTube ad revenue to the holders of the Pluto Alliance. So I have 2 different NFTs from 2 of the different planets, and from one of them I earned about $40, and the other one I earned another almost $40. And so that technically is income that I'm going to be taxed on. But it went into my MetaMask wallet, and I don't know if my MetaMask wallet has my tax information saved in it. But still, just to be safe, I'm going to make sure that I set aside and keep track of it, pay my taxes for it, so that if in the future the IRS starts looking back at all these different things, they won't say, hey, why didn't you ever pay your taxes on this airdrop, because this is income. Another thing with with trading and investing in crypto. Now this one's more common. This is much more similar to stocks. With trading, if you make money, it's technically, well, it's like a small business once again. But if you make money during trading, it's short-term capital gains. And just like trading in the stock market, it's taxed as if it's ordinary income. So you're taxed at a much higher rate. Now, if you were to invest and hold it for longer than 1 year, then you can get taxed at the long-term capital gains rates, which are much more favorable, and you get better rates. So these are some of the different questions and different things that I had thought of, especially with the play to earn gaming. Everything is a little bit new. But when you get into all these different parts of crypto, there's a lot of things that it'll be good to know about as you're getting more and more involved in it, because a lot of the different things with NFTs, with play to earn gaming, it's going to be as if you are running a small business. So then you can start counting some of your losses as expenses, some of your other things as investments, and some of the income you're earning, you're going to have to pay attention to how it's working and keep track of all of this so that you can pay your taxes at the end of the year. So these are some things that I had been thinking of. There are a few accounts that I've seen, some different YouTube channels of people that are pretty familiar with crypto and NFTs. Mark J Kohler is one. He's a tax attorney, and he knows quite a bit about crypto and NFTs. He's got some good videos, especially about how to save money with taxes. Another one is, I'm trying to remember the channel name exactly. I know the guy's name is Karlton, and he did a video recently with Frankie Candles from BitBoy Crypto, and he answered a bunch of really good questions as well. And then there was the Matthew Snider guy that did he did the video with J Chains. And so these are all good places that you can turn to if you have questions. You can watch their videos, reach out to them on Twitter and different places. So these are some good places. I'll include links to their channels and some of their information in the description. But let me know some of the questions that you've been thinking about. Have there been any questions that you've been wondering about in crypto and NFTs and Web3? And go ahead and leave them in the comments so we can have more of a discussion about it. I just wanted to share some of these thoughts that I was having tonight. And I'll see you guys in the next video. Thanks for watching.